Most people think their 401k is the only retirement plan they'll ever need. And that's what we were all taught. But here's the truth nobody tells you. For most people, your 401k alone is too slow, inaccessible, and too tax-heavy to build real financial freedom. I became a millionaire and achieved financial freedom not because I made a crazy salary and not because I picked the perfect stocks, but because I stopped relying only on a 401k and started buying income-producing assets. In this video, I'll show you what your 401k does well, why it's holding most people back today, and what actually builds wealth faster. But before all that, if we've never met, I'm Ernest and I moved to the US back in 2014, making $8 an hour working at Kmart. Today, I am proud to own multi-million dollars in real estate. And over the years, I went from just trying to pay bills to owning multiple rental properties that now build long-term wealth. Most people, I started with the same advice everyone hears. Just put your money in your 401k and you'll be fine. And let me just clarify. That advice isn't wrong. It's just incomplete. Here's what we'll talk about today. First, what a 401k is and what it's actually good for. Then we're gonna look at the 5 biggest problems with 401ks in today's economy. Then I'll share how I personally shifted my mindset from retirement-only thinking to income-first thinking. And finally, I'll show you the smarter hybrid strategy I'd use if I were starting over. Lesson 1, what a 401k is actually good for. Okay, so before we talk about the 401k, we need to first define what it is. So what is it and why is it called 401k? So back in 1978, the US Congress added a new rule to the Internal Revenue Code Section 401k. This new rule allowed employees to take a portion of their income, delay paying taxes on it, and invest it for retirement. So the name isn't some secret formula, and it definitely doesn't mean $401,000. It's just the section number in the giant IRS rulebook. Not exciting, but that's the truth. And so a 401k is basically a retirement savings account you set up through the company that you work for. But the easiest way to think about it is this. It's essentially an account where you set aside a part of your paycheck before it hits your savings account where it grows over time. And you're not supposed to access it until you retire. When you invest in a 401k, you don't just let your money sit there. You typically invest it in index funds, target date funds, or mutual funds. So your money can grow over decades through compound interest. Now, there are a few strings attached, like penalties if you take the money out too early, because the whole point is to let it sit and grow until you're older so you have money to spend in retirement. Okay, so now that we got that out of the way, let us look at the benefits of investing in a 401k. A 401k does 3 solid things really well. The first benefit of investing in a 401k is what we call employer matching, or what I pretty much consider free money. So what do I mean when I say free money? Most companies who offer a 401k plan will match all or a portion of what you put in. Say for round numbers, you make $100,000 a year, and you set up your 401k so that you contribute 6% of your paycheck. At the end of the year, you would have contributed $6,000 to your 401k. Some companies will contribute or match the same amount that you put in, which in this example is $6,000, and will bring the total annual contribution to $12,000. Some companies will match 50% of what you put in. So if you put in $6,000, they will put in $3,000. Companies vary as far as how much they are willing to match, but if they say they offer employer matching, this is what they mean. And that's what I mean when I say free money. If your job offers employer matching, that's an automatic 100% return on day one. Always take the match. Nothing complicated there. Here's the next big benefit, the tax advantages. And this works differently depending on whether you use a traditional 401k or a Roth 401k. Okay, so I know we're adding some nuance to it, but stay with me here and I will try my best to simplify it for you. Let's stick with the same example. Say you make $100,000 a year and you contribute $6,000 to your 401k. If it's a traditional 401k, the IRS doesn't tax you on the full $100,000. They only tax you on $94,000. So you get an upfront tax break today just by contributing. But you will have to pay taxes when you start withdrawing from your 401k when you retire. It's a Roth 401k, you don't get that upfront break. You still get taxed on the full $100,000 income that you made that year. But the benefit is that you won't have to pay taxes when you start withdrawing from your 401k upon retirement. But here's where both accounts are similar and where the real magic happens. All the money inside your 401k grows tax deferred. That means you're not paying taxes every single year on the gains you would in a normal So if your $6,000 grows to $8,000 or $10,000 or $20,000 over the years, none of those gains get taxed while the money is growing. The only difference is when you pay taxes. For a traditional 401k, you pay taxes later when you withdraw. For our Roth 401k, you pay taxes now, then withdraw tax-free later. Either way, that tax-free compounding gives your money way more room to grow over time. I know we went through that a little too quick, so if you want me to create another video talking about the difference between a traditional and Roth 401k, let me know in the comments below and I would be more than happy to do that for you. And so this third benefit of a 401k is honestly one of my favorites. It's automatic. In the same example, if you make $100,000 a year and you choose to contribute 6%, that's $6,000 for the year. Remember? Here's the part that makes it so easy. You don't have to manually move your $6,000 into your 401k account. You don't have to log into anything. Your employer automatically takes 6% out of your paycheck and send it straight to your 401k. It happens even before you see the money, which is honestly the best way to save. Because let's be real, if that extra $500 a month hits your checking account, you and I both know how easy it is to spend it. Automation removes the decision-making and from you even having access to the money. It removes the discipline problem. It turns saving and investing into something that happens in the background while you live your life. So with the same $100,000 salary example, those contributions quietly add up throughout the year, and you build wealth without having to lift a finger. So yes, 401ks are a great foundation. But here's the problem. A foundation alone isn't enough to build a house. Lesson 2. The 5 biggest problems in 401ks in today's economy. Okay, so now that we've talked about all the benefits of having a 401k, let's look at the other side and see some of the not so good things about it. These aren't necessarily deal breakers, but they're real challenges you need to understand if you're serious about building wealth. I've listed 5 challenges that come with investing in a 401k. Challenge number 1. Inflation is quietly eating your returns. Here's the reality. Inflation is like this silent tax that never goes away. Long-term inflation has averaged around 3 to 4%, and the last few years, well, it's even higher. Even if your 401k had a great year and earned 8 to 10%, by the time you factor in inflation, your real return might only be 4 to 5%. And look, that's not terrible, but it's not fast either. It's like jogging with the wind against you. You're moving, but you're not getting as far ahead as you think. Challenge number 2. Your money is locked up for decades. Most of the time, you cannot touch your 401k without penalties until you're 59 and a half years old. Think about what that means. You can't access the money and jump on opportunities that show up like investing in real estate or starting your own business. Yes, technically, you can withdraw from your 401k before you turn 60, but you will have to pay penalties for doing so. And that is enough reason for most people to stop from touching their 401k. Personally, when I invest money into my 401k, I have the mindset that I will not see that money again until I'm 60. So you might look wealthy on paper, but you still feel broke in real life. This is why so many people say, I have all this money in my 401k, but I don't feel like I have any actual money. And that's because it's not liquid. It's not accessible. It's locked behind the giant do not touch sign for decades. Challenge number 3, you're either delaying taxes or paying them upfront. A lot of people think that their 401k is some kind of perfect tax strategy. But the truth is, with the traditional 401k, you're not avoiding taxes. You're just delaying them to the future. And the part nobody realizes is that you don't control what tax rates will be 20 or 30 years from now when you retire. So imagine you retire one day with a cool $1 million. Sounds amazing, right? But with the traditional 401k, every dollar of that is taxable income. To start withdrawing it, the IRS basically taps you on the shoulder and says, hey, remember those taxes you skipped earlier? Yeah, it's time. And if tax rates are higher by then, that's on you. Now with the Roth 401k, it flips. You do pay taxes up front. No tax break today. But the benefit is that your future withdrawals are tax-free. Either way, you're going to have to pay taxes. It's not a matter of if, it's a matter of when and how much. Challenge number 4, there's no leverage inside the 401k. This is one of the biggest differences between paper assets and real assets. With real estate, if I have $50,000, I can control a $250,000 property. That's leverage. I get the benefit of the appreciation of a $250,000 asset instead of just the $50,000. But if you invest in a 401k, every dollar you invest controls exactly the same amount of assets. That's it. No leverage, no multiplier, and no acceleration. And without leverage, your wealth does grow, but it grows slowly. Challenge number 5. 401ks are built for selling and not living. Okay, so what do I mean by that? Let me explain something that most people haven't realized. The entire 401k system is built on this idea. You spend 30 to 40 years building it up, and then in retirement, you sell portions of it every year to live off of. So let's make it real. Most people who reach retirement age have a 401k balance of around $95,000. And even if you were diligent in investing in your 401k during your working years and was able to accumulate $1 million into your 401k, and assume that you need $100,000 a year to live comfortably off of every year. That means you have 10 years worth of income until you run out of money. So if you retire at 60 or even 65, you only have income until you reach 75 at the most. So what do you do when you turn 76? Compare that to assets like real estate or businesses that generate cash flow. They pay you month after month without you having to sell portions of it, which means you will never run out of income. And those are two completely different retirement paths. And so here's the mindset shift that changed everything for me. I stopped asking, how much money do I need to retire at 65? And started asking, how do I replace my income in the next 5 to 10 years? And that changed my whole investing strategy. Instead of only putting money into accounts that I couldn't touch for decades, I focused on increasing my income and buying assets that paid me every month. So before, my strategy was like everybody else's. I'll just save, invest, and wait. But waiting is expensive and life doesn't wait. So I shifted my focus into building businesses, equity, and generating cash flow. And that's when things really sped up. And if you're at the point where you're ready to move beyond your savings or 401k and want help building a plan to continue generating passive income during retirement so you never run out of money, I do offer one-on-one coaching. I'll drop a link in the description below if you want to see what that looks like. So let me be super clear about something here. I'm not saying don't use your 401k. What I am saying is don't let your 401k be your entire retirement plan. Because if you rely on just your 401k, because that grows slowly, locks up your money over decades, and may leave you selling portions of your nest egg just to live, you're limiting what's possible for your future. So here's my personal strategy. This is what I actually do, and honestly, it's pretty simple. Step 1, I take full advantage of the employer matching. If the company that I work for matches 4%, I put in 4%. If they match 6%, I put in 6%. That's it. I don't overthink it. I just collect the free money because that's sort of a guaranteed instant return. No debate there. Step number 2, every other dollar I save goes somewhere that provides much higher returns and not something that I need to wait 30 years to access. For me, that means building capital to buy real estate or starting or investing in businesses. And here's what works for me. 401k is slow, steady, and offers less risk. But real estate and businesses are how I accelerate my wealth. So with this strategy, I get the best of both worlds. I capture the free money from employer matching. I keep control of the rest of my savings so I can invest in opportunities that create freedom today and not just when I turn 60. At the end of the day, here's what I want you to take away from all this. 401k is one tool in your retirement tool belt. It helps, but you can't build the whole house with just one tool. It's a great foundation, but it's simply not enough. What really changes your life is what you build on top of it. The income you create, the assets you own, and decisions you make long before you're 60 years old. You don't have to pick one path. You can use the 401k for stability and still invest the rest of your energy, time, and money into things that bring you closer to financial freedom today, not someday. That's how I do it. Not by making a huge salary and not by timing the stock market, but by learning how money actually works and choosing a more efficient path. Now, if this video helped you shift your mindset even just a little, do me a favor. Hit the like button so more people can see this. And subscribe if you want more real, practical content about money and investing. And lastly, drop a comment below if you have any questions or comments related to what we talked about today. And with all that said, as always, keep learning, keep investing, and make your money work for you.